Hope you're doing well. Got a very important one for you today because we are on the verge of a major escalation in the Middle East, with Iran reportedly planning retaliatory strikes in response to the killing of a top Revolutionary Guards commander by Israel over the past 24 hours. Also, we have got the price of silver, gold, and oil all putting on significant gains, and it's looking like possibly we may be observing the beginning of a breakout in the price of silver. Now, if you watched some of my live streams over the weekend, you know that I was anticipating a significant move in the price of silver yesterday at the beginning of the week. We did end the day yesterday in the green. No major moves though, but if we take a look at the price of silver today, we'll examine the chart and see what a big move this may very well be. We can see that now looks like the breakout may be happening. Here's the chart of silver with this consolidation pattern that we've been discussing over the past week or so, that is formed in silver over the past several years, going back to the 2020 lows, 2020, 2021 highs. We have a series of lower highs and higher lows, the two trend lines converging there. And now today, silver putting on some pretty significant gains. We're going to zoom in. We can see we are testing that upper trend line. We actually penetrated it in trading earlier today. Silver up over 3% today, knocking on that $26 level. Now, I will say this, based on what we're seeing here, could be a breakout, could be a retest of that resistance. Hard to say. We've also got gold taking out new record highs over the weekend. I think that that is a very bullish sign for silver and a sign that we may soon break out of this pattern. Now, in order to achieve that, I think what we need to see is a solid close in the price of silver over the $26 level. I think that would be very psychologically important. And if that happens, I think we're going to see some significant gains here as we move ahead. Now, also, we could just be retesting this line and bouncing off of it. But if you see, we've kind of blown through it, come back down. That's very similar to what we saw in gold before it had its breakout, which it's in the midst of. Let's shift over to the gold chart. There's this long-term cup and handle formation that we've been discussing for some time, several months, which gold has now broken out of. Now, I want to point out there's been, a lot of negative sentiment about silver recently. I've seen even hardcore stackers talking about how they just want to sell their silver and get gold because gold is outperforming it. Now, if you ask me, that's doing it completely wrong, right? Now maybe is the time to sell your gold and buy some silver. Now, I'm not doing either of those things. I just want to point out that, gold has already broken out. But if you notice, if we zoom in on this chart, we can see we had that test of gold, this trend line here, where in Sunday night trading, gold broke through the top part of this line here, this resistance line around 2100, and then got smacked back down on a Monday. And I mean, at that time, I was pointing out that I was very bullish that we were going to blow through this line. The majority of the sentiment I got from viewers and in the community as a whole was that no, very negative sentiment, gold's not going to break out. And it's a funny thing, psychology, right? I mean, humans are very fickle, and there's kind of this basic psychology where when things are moving up, you want to get on board, you get the fear of missing out. When assets are underperforming, they become hated. People don't want to get into them when they're cheap because they see all these other things moving much faster. And I think that's exactly what we're witnessing with silver. But however, if you can override that kind of gut reaction and take advantage of the incredible discount on the undervalued asset, well, I think that that is more the move. And that's kind of what I've been trying to do with silver, is take advantage of the fact that it's still so cheap. Because even if that move today that we see through the top trend line on the silver chart gets smacked back down, it's not going to be long before silver is doing this, like what gold is doing, right? The fact that we're already penetrating that top part of that consolidation pattern, the fact that the fundamentals for silver really couldn't be better, considering what's going on in the geopolitical front, the supply and demand situation for silver. We're on the fourth year now of deficits in the physical silver market. More of it is being consumed than is being pulled out of the ground. There's so much aligning here for silver and the price of silver and for commodities as a whole. Like, listen, I'm not telling anybody what to do. I'm just letting you in on what I'm doing. If you don't want to go for the kind of more speculative metal, I still think gold is incredibly undervalued. And look, when I see gold moving up relative to silver, there's this kind of weird tendency, I think, in the stacking community where people kind of get on these teams like, I'm team gold, I'm team silver, I'm team Bitcoin even. That's one, these dollar alternative assets. And to me, it's like we're all on the same team here. Folks who are looking for alternatives to devaluing fiat currency. I'm happy to see gold breaking out. I've got gold. I'm happy even to see Bitcoin breaking out. That's fine. I mean, I have Bitcoin. I do think that the cryptocurrencies are a bit of a distraction, perhaps, from the metals, but that's okay. I have a small position in Bitcoin, but both of those positions, it's true, are dwarfed by my position in silver, and I just view that as being the $1 alternative asset, which really hasn't taken off yet. But again, I think it's inevitable that when we're witnessing all of these other assets breaking out to new all-time highs, we're witnessing the debt bubble in the United States exploding, the U.S. national debt coming up on a major crisis. We're going to talk about all this as we go through today's video and outline the case for further gains in these hard assets, this real money, these dollar alternatives. If you want to get your hands on some, make sure you check out today's video sponsor, SD Bullion. Right now, they have kilo bars available for $1.29 over spot. Now, it's true, the spot price has moved up a bit. It's up over 3% today. Premiums, it looks like, are moving up a little bit again. That's a good sign. That means that retail investors may be getting into this market, but I still view this as being, the asset I would look at acquiring. So it's not financial advice, just telling you what I'm doing. And this is one of the best deals, I think, right now on physical silver. These kilo bars, any quantity, $1.29 over spot. I think there's going to come a time in the near future when we are all basically just kicking ourselves for not having taken advantage of these low prices. I remember in October of 2023, gold was down to almost $1,800. It was around that time that I bought this little gold bar. And people then were saying, no, it's going to fall further. But I mean, look what's happened since then. So I wouldn't pay attention to all of the negative sentiment in the precious metals. In fact, when you see an unloved asset, when you see the negative sentiment, that is a sign that there's very few people left to sell. I mean, look, if even stackers are out there unloading their silver and getting gold, I mean, once those hands have sold, the weak hands, the moderately weak hands, I guess. I mean, I don't think if you're stacking physical metal that you're looking for a quick flip. So you're kind of by definition not a weak hand. But once even the stackers who are going to sell, who else is going to sell? Prices would have to be much higher to draw more buyers out of the woodwork. Excuse me. One thing I did want to take a look at today before we get into other news is the price of Bitcoin, which is coming under some significant pressure. Now, I'm not anti-Bitcoin. I'm not a crypto hater. I kind of ambivalent on this stuff. I view it as sort of a lottery ticket. I think that there is the potential to have even much bigger gains in the crypto space. But the market movement today, I think, is a clear indication that Bitcoin is not a substitute for gold and silver. It's not the same thing, right? It is a non-dollar asset, so it has that going for it. There's a lot of benefits to cryptocurrency in terms of portability, right? You can just memorize a passphrase and take an unlimited amount of wealth with you anywhere you go. But we're seeing gains today in the price of gold, gains in the price of silver, and Bitcoin's down 5%. So they're not correlated assets. They're different, right? And it's just a fundamental thing that you've got to understand. Bitcoin is no substitute for gold and silver. That is one thing I see a lot in the interwebs, on Twitter, in the comments. Oh yeah, gold and silver are fine, but Bitcoin's better. Well, it's not the same thing at all. And if anything, it has its own use case, I guess, but it doesn't have the history that gold and silver do, and it doesn't behave entirely the same way that they do, not by a long shot. Now, let's talk about how high we could see silver go should we see a breakout from this consolidation. In past videos, I have often made reference to silver's previous all-time high back in 1980. Now, if you adjust that for inflation, the $50 high that silver hit in January of 1980, that gives you a number of like above $200, right? However, I always get pushback on that. That was a unique situation. It was the Hunt brothers cornering the market. Now, never mind the fact that there was huge, inflation problems. Interest rates were getting hiked. The Soviet Union had just invaded Afghanistan. Gold also hit a record high at that same time, right? So it's not like anybody was out there cornering the gold market, and it still hit a record all-time high. But let's just leave the 1980 number off the table. Forget about it. Let's take a look at our inflation calculator here, just from silver's more recent high in 2011 of $49.50, and we'll calculate what that would be in inflation adjusted dollars here in, well, this is up to February 2024 because that's the cutoff for the calculator. So, inflation is marching along. So we guess we'd call it like $70. But that would be the 2011 high in inflation adjusted terms. And remember, silver, even though it's, maybe on the verge of breaking out, it's up 3% today or something like that. It's just under $26. It's, far, far below the 2011 high, even just discounting that very much higher level from the 1980. So look, there's a lot of potential for silver to move up from this level. Even if you take gold's high from 1980 of $850 and you adjust that for inflation, it gives you a number around, I think, $3,300. So gold, which is now testing the $2,300 level, has what? Maybe another 50% to go before it's at its inflation adjusted all-time high. But even if you're just using the 2011 number for silver and discounting the 1980 number, silver still has more than 100% to go before it takes out its inflation adjusted all-time high. So you can kind of see how much more potential for moves there are in silver. And that is typically what one sees in a precious metals market. If you look at the gold to silver ratio chart, I don't have it pulled up right now. I'm not going to bore you with the chart at this moment because we've looked at it many times, but it comes down during bull markets, and there's no reason to think that that's not going to happen this time. However, you can maybe see that silver hasn't broken out yet. It shows you just how young this precious metals market is. And I mean, when you look at that gold chart, I just want to go back to them. It's a beautiful thing. Look at that. I mean, there's no denying that gold has broken out of this pattern and is in a major bull market at the moment. And yet still, all eyes are on cryptocurrency. All eyes are on tech stocks. There's not much mention of this in the mainstream media. Nobody is talking about silver. Nobody is talking about it. And again, that's a huge indication that now's a good time to buy it, right? You don't want to buy something when everybody is all in, when everybody is buying. How many people are buying silver right now? I mean, there's tons of people out there watching ads on CNBC, probably getting Bitcoin, going out there and open trading accounts, opening up a Robinhood account. I mean, I don't know how people buy Bitcoin. I bought my Bitcoin a long time ago. It's in, storage, and that's it. I'm just kind of sitting on it. But who is buying silver, right? I mean, even stackers are selling it. So now is still a good time to buy silver, if you ask me. And it just shows you, again, the setup here is enormous for a big move higher. Now, what are going to be the catalysts? Well, as I mentioned, geopolitical instability seems to be on the burner today. Also, a huge debt crisis in the U.S. We recently talked about the Congressional Budget Office report, which showed that by 2050, they're anticipating debt to GDP in the U.S. to go to 166%. I think their forecast for the debt by 2050 is something like $140 trillion. I mean, it's absolutely insane how high they are saying that the debt is going to go. But that's kind of in line with all of our unfunded liabilities, all the things that we're on the hook for moving forward, like Social Security, like Medicare, like retirement benefits for federal employees, all these things that the federal government has promised. It's more than $200 trillion. So the debt is going to continue to expand. All of this debt ultimately is going to be monetized by the Federal Reserve. It's going to be hugely inflationary. And at least in nominal terms, it's going to be very good for real tangible assets like gold and silver. In fact, you have got, you don't have to take it from me that there's a big debt crisis. You have got BlackRock CEO Larry Fink now worried about snowballing U.S. debt, according to MarketWatch. And he's saying that it's going to hit new record highs. I mean, he says that the debt could hit a record in as little as 5 years. I'm assuming he's talking about the debt to GDP ratio there, because if you just look at the absolute numbers, the U.S. debt hits a new record every day practically. I mean, every single day we're putting in new record highs in the U.S. debt. In fact, I did a little math. I was looking at the debt to the penny website. Now that we're in April, we are in a position where we can examine the debt data from March. So I looked at the Treasury's debt to the penny website. Now they only have data going up to March 29th, but we'll just give them a pass, right? That's Friday. We'll say maybe they took the weekend off from borrowing. Let's just look at the numbers from March 1st to March 29th. So March 1st, according to the US Treasury, the debt started off at $34.393 trillion. On March 29th, it stood at $34.586 trillion. So that means that between March 1st and March 29th, an additional $193 billion was borrowed. You can annualize that number, and it gives you an annual deficit of over 2.3 trillion, more than we are being told. Now, if you look at what Jerome Powell tells us, what the central bankers tell us, they constantly talk about this strong, growing U.S. economy. The current dementia patient in the White House tells us, Bidenomics is causing a great strength in the U.S. economy. GDP numbers are up. Where do you think that GDP is coming from? It's because we are borrowing huge amounts of money and spending it into the now. Even Jerome Powell, in his recent comments this past Friday, acknowledged, when questioned, that we are not on a sustainable fiscal path. And the only thing that the interviewer could really get out of him beyond that was that the sooner we fix it, the better. But listen, let me know in the chat what you think. Do you think we're going to fix the fiscal problem? Put a 2 if you think we can just get it under control. Put a 3 if you think that it's already past the point of no return. I think you can guess where I stand on this question. Now, let's move on here to the geopolitical situation, because what is going to guarantee that the debt continues to explode? Well, certainly out of control entitlement programs domestically that are basically a Ponzi scheme, and the way that they're structured, the only way that they can be paid the benefits is in devalued currency. You don't have to take my word for it. The maestro of the Federal Reserve, Alan Greenspan himself, said this in congressional testimony in regard to Social Security, that they can guarantee payments in any amount, but they cannot guarantee the purchasing power of those payments. And that's exactly the scenario we're going to face. However, there's also the fact that we are heading towards a massive global conflict, which is already underway, and there are ample signs that this is on the verge of a major escalation. And do me a favor, we've got 414 people in the live stream, 72 likes. Smash that like button, help get this information out into the public, because you're not going to hear about this anywhere else. The mainstream is not going to guide your attention to the debt crisis, to the undervalued nature of physical, tangible assets, and they're probably not going to give you the straight information on what's going on worldwide in the geopolitical realm. But here, let's get into it. So, yesterday, following airstrikes over the weekend that killed dozens in Syria, these are Israeli airstrikes, there was an airstrike conducted in Damascus, the Syrian capital, which killed 7, including 2 top IRGC generals. That is the Islamic Revolutionary Guard Corps, the aspect of the Iranian military that is tasked with defending the revolution there. So a bit of a more ideologically driven group. This is a group that has a lot to do with training the Iranian. Oh, there's my cat. And you just saw a paw on the camera there. Hey, buddy. Anyway, how rude of my cat to walk on my table like that. Anyway, there's no controlling these little critters. But listen, the airstrike in Syria killed, back to serious matters here, this really isn't a laughing matter. It's just, sometimes animals can kind of introduce some levity into life, and it's nice, and we need that given how serious things are getting here on this front. But this guy, Mohammed Rezi Zahidi, he was a senior commander in the elite Quds force of the IRGC. And what I was saying there, before I was interrupted by my feline friend here, was that these IRGC forces are responsible in part for interacting with these Iranian proxies throughout the Middle East, in Iraq, in Yemen, in Syria, in Lebanon, the Hezbollah groups. And this has been a potential scene for a major escalation in this conflict since October. And now, as a result of these strikes, one, this was done on the Iranian consulate in Syria. So I don't think it should be overlooked how escalatory that is to just level a diplomatic building, and take out top military personnel. Now, regardless of how you feel about whether this is justified or not, the important part is that this is going to be very escalatory. And Iran's ambassador, in reference to this strike, said that at least 5 people had been killed in the attack, including 3 military personnel. And then he said that Tehran's response would be decisive. So that was yesterday. Now, before we get on to today's developments, which are, potential retaliation here, I want to draw your attention to the chart of crude oil, which now, following these developments in the Middle East, earlier today it was up over $85. It's given up a little bit of the gains, but it's back just under $85. So listen, this number I think is going to be going much higher. When it comes to hard assets, it is good to be diversified, right? Like, I'm not all in on silver. I do hold gold. I have some platinum. Also, something that I've mentioned back in October following the attacks in October 7th, the Hamas attacks on Israel that kind of kicked this whole conflict off. I mean, certainly it's, decades in the making, but the more recent, more relevant attack perhaps that kicked all of this off, I mentioned that I was buying some energy stocks and getting into the energy space. And then since that time, they've kind of been languishing, to be honest. But now that it's becoming clear that a conflict in the Middle East is more and more likely, it's going to send the price of crude oil up. They're really starting to, show some signs of movement here. And I think that there's a lot of assets that are going to benefit from what is ahead. Now, silver just happens to be one that I consider to be extremely undervalued at the moment, but other things we should be paying attention to here, like energy, like natural gas, crude oil, all of these things have the potential to be moving much, much higher, not least of which is, again, crude oil, because of the devaluation of the dollar, and also in terms of these geopolitical conflicts, disruptions to supply chains. I mean, if Iran gets involved in a conflict with Israel and with the United States, then there's a strong likelihood that the Straits of Hormuz will be shut down. That's where about 20% of global oil production flows every day. You can imagine what that's going to do to the price of crude oil. Look, if you cut off 20% of the supply of something as critical as crude oil, a commodity for which there is somewhat inelastic demand, right? There's a certain amount of crude oil that the world just needs to keep moving forward. And, when you start having to sacrifice some of those things that are fueled by that crude oil, it can lead to some major problems. So if you get a 20% disruption in supply, it doesn't mean a 20% increase in price, right? I mean, it could mean a doubling or a tripling of price depending on how much of that supply gets cut off. But crude oil starting to move much higher. I think that this is all sending a very strong signal about what is ahead. Dollar devaluation and geopolitical turmoil. Gold and silver also sending a message with their moves today. One, the geopolitical turmoil, but also that, the Fed is very likely to begin cutting rates this year. They're going to be cutting rates in the face of already problematic inflation. They need to do it to bail out the economy because we have an insolvent, debt-addicted economy. We got a banking sector that's on the verge of collapse. You got commercial real estate on the verge of collapse. You have got all these problem areas that can only be alleviated by a return to easy monetary policy. But look at what is happening in the world. I mean, in the past, in 2020 or the great financial crisis in 2008, when the Fed started printing money, started buying up debt, started slashing rates, started driving yields down, inflation wasn't a problem. But clearly, it's a very different setup right now. And that is why gold is taking out new all-time highs. It's why I expect silver soon to begin its move on the road to new all-time highs, meaning north of $50 an ounce for silver. And again, with the way that silver has been performing with this consolidation pattern, there's a lot of frustration out there because people have been seeing Bitcoin smashing higher. They've seen tech stocks smashing higher. And, silver's going to have its day. But anyway, I kind of lost my train of thought there. It happens sometimes on these live streams when I start going off on tangents. Let's talk about this scenario with Iran preparing strikes, because that is ultimately the story of the day. This is from, now, look, this is from the Jerusalem Post, okay? So you have to take this with a grain of salt, because most of what is contained in this article is based on the commentary of a Israeli pundit, okay? But the headline here: preparing strikes on Israeli embassies, the coming Iranian response to Syria strike. Now, if there's something to this, it could be a real problem. And this article is citing this guy, Hezi Samanatov, a commentator and correspondent for Arab Affairs of News 13, who had this interview. And the Jerusalem Post running with this headline that they are preparing attacks against Israeli, specifically embassies, I think is very interesting, and we should be on the lookout for what this could entail. So he references the assassination of this top Iranian general and says now they are laying the groundwork to strike at Israeli diplomatic representations worldwide in the Arab world, Europe, or the United States or South America. The assassination attributed to Israel certainly makes the confrontation between Iran and Israel more direct rather than indirect, as it has been now until Syria. Now, listen, again, this is just commentary from this Israeli pundit. This does not appear to me to be based on anything that we've heard from Iranian leadership. But you got to wonder, when you see a headline like this, what are we being set up for here? I mean, this could be a number of scenarios, right? You have to remain circumspect. You don't want to go down any rabbit holes and assume that you fill in the blanks too much on your own. But listen, preparing strikes on Israeli embassies. So, I mean, my initial gut reaction, kind of hot take on this, is that this could mean that perhaps this news outlet has some kind of inside information. Okay, perhaps this is based on some kind of analysis of past behavior. Or third possible scenario is maybe this is conditioning us for some kind of a false flag strike on embassies, on diplomatic places. I mean, the reason that they're talking about striking embassies is because that is where the airstrike in Damascus occurred, right? It was on an Iranian consulate. So, I mean, the speculation is, I suppose, that Iran would respond tit for tat. But based on what I've seen, at least in the mainstream media, and again, you got to take all of this with a huge grain of salt, they haven't specifically threatened to target embassies, but this is the latest from The Guardian. Iran decides on response to Israeli strike that killed top commanders. And it sounds like the Iranians are being a lot more ambiguous about how they may respond to this. Iran's Supreme National Security Council has decided on a required response to the Israeli strike on Damascus on Monday night that killed 3 top commanders in Iran's Al-Quds force and 4 other officers. That's according to Iranian state television. So they are just saying that they will respond at a time of their choosing, being somewhat ambiguous here. Ayatollah Ali Khamenei, the Iranian supreme leader, says we will make them regretful about the crime and similar acts. So, what are we going to see here? There's a few options, right? We could see attacks on Israeli embassies, certainly, something to be on the lookout for, and that could escalate the conflict. It could lead to conflict between Israel and Hezbollah, those Iranian proxies. Maybe that's how we see the escalation play out. It's also possible that we could see Iran give instructions to its proxies in the region to begin attacking American bases again. If you recall, there was that attack on an Iranian or a U.S. base by an Iranian proxy. The U.S. base was in Jordan. That was when we had some U.S. military personnel killed in this conflict for the first time. And subsequently, the U.S. launched some retaliatory airstrikes, kind of had to, I guess, to save face. But the Iranians told their proxies in the region, in Iraq and in Syria and in Lebanon, to kind of take it easy on targeting American military personnel in the region, probably fearing some severe retaliation. We got the likes of Lindsey Graham, who back in October and November was saying that if U.S. personnel were killed, it should be a red line, that we should be attacking Iranian oil infrastructure. Now, again, if that happens, keep an eye on the price of crude oil, because Iran produces something like 2 million barrels of oil a day. A lot of that flows to China, but it's a global market. So if that gets taken offline, could have a big impact on things as well. But the Iranians were kind of trying to, de-escalate things between themselves and the Americans. However, following this strike, I mean, it could be that the gloves come off again. We're going to have to wait and see. But obviously, this is a major escalation. The Israelis also still preparing for their invasion of Rafah, the southern city in Gaza. We heard earlier in a couple weeks ago that Iran had given the green light to Hezbollah forces to attack Israel in a broader context should that invasion of Rafah take place. And that was expected to occur during the month of Ramadan, which I believe we are still in, if I understand the dates for that correctly. But yeah, I mean, look, there's a huge perfect storm brewing here for commodities, for, a downfall of the dollar, at least in terms of purchasing power. It's no surprise that Iran and Russia together, two of our big geopolitical opponents on the chessboard, they're working on a gold-based cross-border payment system that uses tokenized gold. They told us that over a year ago. So, the big driver for the gold and silver rally thus far, especially gold, has been purchases by central banks who are anticipating global de-dollarization of the financial system. A lot of these BRICS nation central banks buying up gold, but it's going to be when retail investors kind of get clued into what's occurring, and that's coming very soon, I think. That's why you're seeing premiums rise on silver starting to tick up. That's why you're seeing silver start to move. That's got to be retail investors. That's going to be folks in the U.S., maybe big money, but not central banks. Central banks don't. Very clear indeed. Sorry if we got some interruptions there. I got a reconnecting message. I've never seen that on a live stream before. But it's probably a sign that it is time to wrap this one up, going on a little bit longer here than usual. Keep an eye on this silver chart. We've still got several hours of trading here, but if we get a close above this trend line, and then we get a close above 26 bucks, it could be off to the races for silver. And if not, if this just proves to be another retest of that line, I think we'll be blowing through it very soon, similar to what happened with gold. It blew through it, got knocked back down, and then a couple weeks later, we saw new all-time highs for gold. I think that something similar is likely to occur in the silver market. Someone in the chat there says I'm getting hacked. Yeah, maybe it's a cyber attack. We'll see. We'll probably see more of those moving forward as well. But anyway, let me know in the comments what you think about all of the topics that we covered today. Stay safe and happy stacking, everybody. I'll catch you next time. Smart Silver Stacker